Hello and welcome to India Business Hour. I'm Parikshit Luthra. Here are the headlines we are tracking this evening.
That includes things like U.S.-China relations, that could slow down all this progress. And so hopefully you get reasonable work on both sides. And, India can play a role there.
Bill Gates says India can play a role in diffusing the tension between US and China. Adds what the Delhi G20 did was very constructive as it turned the attention to a win-win situation. That's an exclusive.
India continues to be among the fastest growing major economies in the world.
We've been a major supporter of India for years, from the business, 60 years we've been there now.
Top economists and global CEOs are upbeat on India at Davos. IMF's Geeta Gopinath says India is benefiting from the shift of production from China. Bank of America's Brian Mohinian says investments into India will continue as long as policies ensure returns. HCL Tech CEO Vijay Kumar expects to end FY24 with industry-leading growth rate of over 5%. Tech Mahindra's new CEO Mohit Joshi lays out his plan to reshape the company and improve the margins in his first interview since taking charge. SBI Chairman Dinesh Khara says RBI has tightened unsecured loan norms as it wants to avoid overheating of the system. Axis Bank CEO Amitabh Chaudhary says the new norms are likely to temper credit growth. A mixed bag for HDFC Bank in Q3. Net profit beats estimates. Net interest income misses street. HDFC Bank management says that the current credit environment continues to be benign. Adds that they plan to add close to 5,000 branches in the next 3 to 5 years. The government could announce the third phase of incentives for electric vehicles in 15 days. Sources say a 12,000 crore rupee outlay is being considered for FAME 3 for 2 years compared to the 5-year outlay under FAME 2. That's an exclusive. 2 weeks for the interim budget. Sources say that the government is considering extending the 15% concessional corporate tax rate for new manufacturing companies. Discussions currently underway on up to a 2-year extension. Fears of a wider war in the Middle East grows after Iran strikes targets in Syria and Iraq. US terms Iran's attack reckless. Israel continues to pound Gaza. Hamas claims more than 24,000 Palestinians have been killed so far. Supreme Court upholds Delhi High Court's order referring the 150 crore rupee dispute between SL Group-owned City Networks and Aditya Birla Finance to arbitration. Cites its recent judgment where even non-signatories to an arbitration agreement can be subject to the group of companies doctrine. Aditya Birla Finance claims Citi defaulted on the loan extended to it, claiming that Z agreed to be the guarantor. The Civil Aviation Ministry sends showcause notices to Indigo and Mumbai Airport after a video went viral showing passengers sitting on the tarmac eating food. Both the airline and the airport have to respond to the ministry by end of day. Indigo says it has already initiated internal inquiry. Donald Trump wins the first Republican contest ahead of the 2024 US presidential elections. Wins the Iowa caucus with 51% of the votes. Vivek Ramaswamy drops out of the Republican presidential race and endorses Trump. Dalal Street saw profit booking after hitting record highs in intraday trade. The Nifty fell close to 70 points while the sensex fell 200 points. Both those indices ended 0.25% in the red. The mid-cap index fell in line with the blue chips, but banks fared slightly better, with the Nifty Bank ending flat. In earnings now, HDFC Bank has reported a mixed set of numbers in the third quarter, with net profit beating street estimates, while net interest margin misses the mark. Ritu Singh is joining us now with the details. Ritu, take us through the numbers and what are some of the explanations, what are some of the details that the company is sharing?
Well, like you said, it was a mixed bag, but I'd call it more of a balancing quarter because the bank is still absorbing the effects of the mega merger with HDFC Limited. And that said, it does believe that FY25, that is the coming year, is going to be the year of growth. Let's start with the core income, that is the net interest income. That grew by about 4% sequentially. And we're looking at numbers only sequentially because the previous year's numbers are not comparable on account of the merger. This is on the back of advances growth of nearly 5%, deposit growth of just 2% sequentially. When it comes to unsecured personal loans, where there's been a lot of talk in the market about overheating, the bank clarified that it saw a growth of nearly 1.6% sequentially and 10% year on year, and so there's no cause for concern there. The profit was up about 2.5%, sequentially, and this is because higher provisions also weighed on the bottom line. Provisions, saw a sharp rise in the quarter, and that's also because the bank made contingent provisions of nearly 1,200 crores for its AIF book after RBI regulations recently. Its AIF book is about $12.2 billion rupees, and the fair value is about 5 billion rupees, more than that. Margins were flat sequentially if you look at them at 3.4%. That's been one of the concerns for the street. Asset quality did improve at 1.26% gross NPA and net NPA at 0.31% in the quarter. The management said that the current environment remains benign, so there's no cause of concern there. Write-offs at about 31 billion and slippages of 70 billion during the third quarter. Capital adequacy ratio, that did come down sequentially in the quarter, but that's also because there was a 97 basis point impact because of the higher risk weight rule imposed by the RBI. In terms of outlook, the bank maintains it's looking to double its loan book every 4 to 5 years, add another 5,000 odd branches in the next few years, and in the coming quarters it will build on the deposit momentum, change the mix of products more towards retail, which is currently about 54% of the book.
Right. Thank you very much, Ritu, for recapping all those important details for our viewers. Moving on, India's top banker spoke exclusively to CNBC TV 18 in Davos on the sidelines of the World Economic Forum Summit. State Bank of India Chairman Dinesh Khara said that the Reserve Bank has tightened unsecured loan norms to avoid overheating the banking system while ensuring healthy credit growth. However, Axis Bank CEO Amitabh Chaudhary has said that the new norms are likely to temper credit growth, adding that the Reserve Bank is clearly worried about exuberance on retail and unsecured loans.
Going forward, there should be better situations to prevail, and once the Fed will start cutting interest rate, maybe I would say that not before the middle of this calendar year, but maybe in the third quarter, we expect that there could be some interest rate cut which we might get to see. I think it was one of the responsibility of Reserve Bank of India to ensure that there should be healthy growth in credit. When it comes to credit deposit ratio for our domestic book, it would be somewhere around 66-67%. So we have ample headroom available.
It recognizes that every bank has its own context, and I think they will react and look at the credit deposit ratio with that context in mind. We have an extremely smart regulator, very proactive regulator. I'm sure they're listening, and hopefully some of these things will converge at some point. But I do expect the advances growth to temper a little bit from here. They're not going to continue at the same pace. Deposit growth is going to increase dramatically. And if it stays where it is, then I think the overall advances growth in the system does need to come down by a couple of percentage points.
The big newsmaker from Davos, Bill Gates, has said that India can play a role in diffusing the tensions between US and China. In an exclusive interview with CNBC TV 18 in Davos, Gates said that what the Delhi G20 did was very constructive as it turned the attention to a win-win situation. Gates also said that he was most excited about the impact of AI on education and healthcare.
Which is the use case that you're most excited about when we talk about the transformative power of AI, inclusive and responsible AI?
Well, the two that are dramatic are health, both for creating new tools and for helping patients seek healthcare in a smart way, and then education, where you can have an individual tutor that helps you learn new things.
What's the one big risk that you're most concerned about today as you look at the world?
Well, the instability that includes things like US-China relations, that could slow down all this progress. And so hopefully you get reasonable works on both sides, and India can play a role there.
what role do you believe India can play there?
Well, India's, setting an example. India works both with China and the United States. And we saw at the G20 it was very constructive to turn the attention to win-win relationships.
Geeta Gopinath, the first Deputy MD of the IMF, expects a soft landing in the US as she doesn't see a dramatic interest rate hike. Speaking to Shireen Bhan in Davos, Geeta Gopinath also shared her outlook on India. She said that the shift of production capabilities from China was aiding India, adding that India needs to stay on the reform path.
I think we might see a soft landing. I have a little more optimism about that, which of course means that we would have also gone a whole long way in terms of bringing inflation down, right? So what we've seen in the past year is actually a quite resilient global economy with some pockets of strong resilience like the US. But China also did somewhat better than we expected in the second half, and several other emerging markets, including India, did better. But that came along with inflation coming down. So it meant that central banks could take their time to assess the situation, and we didn't see very dramatic further interest rate increases. So the odds of a soft landing have definitely improved.
Odds of a soft landing have improved, but let's talk about interest rates and now the challenge as far as central bankers are concerned. As you rightly said, inflation has started to temper. The Fed's on pause at this point in time. The question now is, when do we start to see the rate cycle turn? When do we start to see the first cuts come in? But even when the cuts do come in, what are we talking about in terms of higher for longer? What does that mean exactly? What will the new normal be as far as rates are concerned?
So the Fed clearly has a challenging few months ahead of them, because this is, in some sense, trying to get the final descent of inflation back down to target and to stick the landing so that you don't have it, you hit the target and then again you bounce off of it. You don't want that to happen. So India continues to be among the fastest growing major economies in the world. We expect that to continue into 2024. So that's a very positive story. There are other reasons why investors are looking at India, because of the shift away from, say, locating production in China and moving more of that to other countries, including India. You're right, though, there is a disconnect between the number of projects that are being announced, foreign direct investment projects that are being announced going into India. You've seen a real sharp increase in that, as opposed to when you actually see the money that's coming in. The money that's coming in, you're not seeing that yet. Now, this, of course, can take time. The only thing India can continue to do is keep on the reform path. Building infrastructure is critical, and of course they've done really well on that front, both in terms of roads and ports and transportation and so on, but also in terms of the digital infrastructure. Both of those are winning strategies, and they should continue on that front.
CEOs around the world have their eyes on India. There's lots of talent, lots of capacity, and a 6% growth rate is quite good. That's the word coming in from Brian Moynihan, CEO of Bank of America, speaking to Shireen Bhan in Davos. Moynihan said Bank of America will continue to invest in India if policies ensure returns. He also added that India's stock market rally is good, but high valuation of companies makes it harder to invest.
We've been a major supporter of India for years, from the business, 60 years we've been there now. And so it's a great dynamic. It has lots of talent. It has lots of capacity. It has an ability to put that all to work. And the administration for the last many years has been saying, how do we build India, the economy up? And so we have it growing at almost 5.5% to 6% next year, which for the size of the economy it's coming, that's a very strong growth rate. Now they have to watch out for the other things. Oil prices coming up make it more difficult. That's why they're going so, I assume they're going so hard in renewables, because that's energy independence. It's hard for people to sort of translate that renewables are a source of independence from paying the market prices for oil and things. So they're working on a lot of things with growing pains and all that goes on. But at the end of the day, as a place to produce, as a place to do it, when I talk to CEOs around the world, they are all eyes on India. And the investment will keep following if the policies make sure that investment can get the returns, get in and out, and things that very liquid economies like Europe and the United States allow to happen.
Do you see a lot of M&A activity of strategics looking at getting into India? Is that likely to be a big theme that plays itself out, given the domestic story at this point in time?
There'll be a lot of looking, but with the stock price in India at an all-time high, that always gets, it always looks good, but then the question is valuation and getting things done. And that's what's going on around the world. The certainty of completing transactions is in certain economies is tough. The interest rates cause a higher debt carry cost to actually make the purchase price. And then secondly, valuations have got to get more in line where more fundamental valuations come through.
HCL Tech MD and CEO Vijay Kumar expects to end the financial year on a good note. Speaking to Shireen Bhan on the sidelines of the Davos summit, he added that the company expects to achieve a growth rate of over 5% by the end of the fiscal year. Meanwhile, Tech Mahindra's new CEO Mohit Joshi has laid out his plan to reshape the company and has plans to improve the margins in his first interview since taking charge.
Q4 continues to look good, so we will close this year with 5 to 5.5% growth, which will be the highest in the industry. The environment is still very cautious. There are some pockets where we are seeing some resilience, like SAP transformation, data transformation, in some pockets cloud migration, cybersecurity. So we are very sharply focused on those areas where the spending is resilient.
As far as margin expansion is concerned, those levers are quite well known, right? I think the levers have to do with the shape of the pyramid. Now again, with the pyramid, what I can tell you is that Tech Mahindra today has the most experienced team in the industry, right? Which is why if you look at the transformational programs that we are driving, those are the most stable programs and that have delivered, because on average, we have a team with 9 to 10 years of experience as opposed to 2 to 3 years for our peers. So I don't want to lose that advantage fully. But we will have to look at how we reshape our pyramid over time and with growth.
Now to a CNBC TV 18 exclusive. The government is likely to announce incentives for electric vehicles under the third phase of the FAME scheme in 15 days. However, the subsidies are likely to be tapered down. Sources say government is considering a 12,000 crore rupee outlay for the scheme over the next 2 years. Compared this to FAME 2 scheme, which provided subsidies for 5 years. Sources also say subsidies per vehicle will be lower under FAME 3 compared to FAME 2, and government could bring electric trucks and tractors under the ambit of the FAME 3 scheme. The scheme is likely to apply to two-wheelers, three-wheelers, cars for shared mobility, buses and charging infrastructure. Sources also say that the government is hopeful of exhausting the entire 10,000 crore rupee outlay under FAME 2 by March this year. Onto a CNBC TV 18 exclusive. The government is considering extending concessional corporate tax rate for new manufacturing firms. Sources tell us that the industry is in favour of the extension and believes that it is pivotal to attract investments. Timsi Jaipuria now joins us with all the details. Timsi, what are your sources telling you?
That's right. Sources tell CNBC TV 18 that the government is considering extending concessional corporate tax rate for new manufacturing firms in the upcoming interim budget. Sources say that their discussions are currently underway to give at least 1 to 2 year extension to the sunset clause, which expires on 31st March 2024. However, no final decision has been taken so far, but just for a better understanding for our viewers, 15% corporate tax rate is currently available to new domestic manufacturing companies under Section 115BAB. To avail this, the condition was that the new manufacturing units have to commence manufacturing operations by 31st March 2024. Since this sunset clause is expiring, the proposal on the drawing board is to give this sunset clause an extension. Whether it is warranted or not, it is something that the discussions are still underway, and it is also one of the major asks of the industry. And India Inc. feels that if extended, this will be pivotal in attracting investments, also will help continue to promote the ongoing Make in India drive, and gels well with the idea of making India a manufacturing hub. So let's see whether the proposal makes it as part of the key interim budget announcements or not. Back to you.
Thanks, Timsi, for joining us. Moving on, the Supreme Court has upheld the Delhi High Court's decision to refer the 150 crore rupees between Aditya Birla Finance and City Networks to arbitration. This is a cause of concern for Zee, as the company is the guarantor for the term loans that was extended to City Networks by Aditya Birla Finance under a credit arrangement letter in 2017. Ashmit Kumar now joins us with all the details. Ashmit, how will this impact Zee Entertainment, and what does this mean for the company now?
Well, troubles appear to be mounting for Zee Entertainment. The Supreme Court today referring a payment dispute between Aditya Birla Finance and City Networks to the arbitral tribunal. The catch here is that Aditya Birla Finance is hoping to rope in Zee as a party in this arbitration. Importantly, the Supreme Court leaving the door open for Aditya Birla Finance. Here are the facts of the case. Aditya Birla Finance had extended a loan of 150 crore rupees to City Networks, and admittedly there was a default. The amount that is being claimed by Aditya Birla Finance, outstanding dues, is north of 130 crore rupees. They're claiming 130 crore rupees plus interest over the period of this time of this loan facility, and importantly also claiming the role of Zee Entertainment as the guarantor. Now, the Delhi High Court had referred this dispute to the arbitral tribunal, which has now been upheld by the apex court. And importantly, the Supreme Court in its decision today very clearly voicing its own views, pointing out that in a recent judgment, the Supreme Court itself had held that even a non-signatory can be made party to an arbitral agreement, and that it should be left open to the arbitrator to decide whether or not a party, and even a non-signatory, whether or not can be bound by such an arbitration agreement. So it is that one condition that is now falling upon Zee Entertainment. This issue has been left open to the arbitrator. Zee Entertainment is at liberty to argue its case before the arbitrator, but nonetheless, the Supreme Court citing the group of companies doctrine and holding that once again, that even non-signatories can be made party to such an arbitral dispute. This issue will now be decided in the hands of the arbitrator.
All right, thanks Ashmit for joining us. Coming up on India Business Hour, the Indian government has accelerated its semiconductor drive. Several states are wooing investors as well. But has there been adequate focus on R&D? A special report coming up. And you can also catch CNBC TV 18's news and updates on Facebook, X, Threads, Instagram and JioCinema. Dense fog disrupted flight operations at Delhi airport yet again. As of 3 p.m. today, over 124 flights, domestic and international, have been delayed. 10 flights have been cancelled. The airport issues an advisory urging passengers to contact the airlines before starting travel. The Ministry of Civil Aviation has issued show-cause notices to Indigo and Mumbai Airport after a viral video of passengers eating on the tarmac at Mumbai Airport sparked security concerns. Indigo has initiated an internal inquiry to address the matter. The airline stock fell over 2% in trade. Danish Anand is here with the details. Danish.
Well, the Ministry of Civil Aviation has sent a show-cause notice to Indigo and Mumbai International Airport on the basis of not being proactive in anticipating the situation and making the appropriate facilitation arrangements for the passengers at the airport. Both Indigo and Mumbai Airport violated rule number 51 of the Aircraft Security Rules 2023, and according to the notice, Indigo allowed disembarkation of passengers onto the apron and then boarded them on another flight without following the procedure of security screening. Moreover, the aircraft was parked at remote bay, which caused more problem for passengers as they were deprived of basic facilities like restrooms and refreshment at the terminal. Moreover, neither the airline or the airport informed BCAS about this. Indigo and Mumbai Airport have to reply to the government by the end of the day, and if replies are not received, then a financial penalty will be imposed.
Semiconductor manufacturing has captured the fancy of Indian industry. This has gained momentum following the shortage that hit the world during and immediately after the COVID pandemic. This was driven by the need to find an alternative to China as a supplier, but experts say policymakers may be laying too much emphasis on manufacturing and not enough on design, engineering and R&D. CNBC TV 18's Jude Sanath finds out why.
कि 2024 में पहली मेड इन इंडिया मेमोरी चिप गुजरात में माइक्रॉन के प्लांट से निकलेगी.
With a chip shortage plaguing global supply chains in 2023, several markets, including those in the US, Europe and Asia, are looking to shore up their chip making and supply lines in the new year. In India, the chip obsession has trickled down to states like Gujarat, Assam and Tamil Nadu. US-based semiconductor firm Micron will invest in a new plant in Sanand, even as the Assam government says it's in talks with Tata Electronics to set up a chip-making plant in the state. Semiconductors were in focus at both the vibrant Gujarat and the Tamil Nadu investor summits. The Tamil Nadu government has used the occasion to unveil its first semiconductor policy, which will see the state offer up to 50% subsidies over and above the centre's $10 billion subsidy plan to chip makers. But economists and experts have cautioned against focusing too much on chip assembly, saying governments will be better off by laying emphasis on building a composite semiconductor ecosystem.
Just building one or two factories is not going to be enough, but if you begin to build an entire ecosystem from the top of the supply chain to the bottom, then you get enough scale, I think, to start having new firms emerge that are creating even more value. Design is just as value additive, often more value additive than manufacturing itself. And India has real design centers in Bangalore, in Tamil Nadu, and elsewhere, and building out design expertise can be, I think, just as important as building out the manufacturing base.
Incidentally, Tamil Nadu's semiconductor policy also incentivizes semiconductor design on the funding and industry academia partnership front. The policy document has targeted creating a talent pool of 2 lakh skilled engineers and workers in the sector. The center is also working along these lines.
We will put in whatever resources are required to be put in. आप उसमें knowledge partner बनिए और साथ में जिन लोगों को भी ला सकते हैं उन लोगों को लेके आइए so that we can create an ecosystem for R&D, for validating new ideas and for taking the entire journey to a next level.
Names like Polymatic, ISMC Consortium and Singapore-based IGSS Ventures are looking to establish fabrication units in Tamil Nadu and Karnataka. However, economic experts are not thrilled about the subsidies being offered to woo such investments.
What we are worried about more is the excessive subsidization. If you put together everything that the state governments, the central government, everybody's offering, then you have to ask, what am I getting in return? So that's why the Micron example is very important in the book, because here's a factory which is going to produce, not logic chips, but memory chips. We pay, the entire investment is $2.7 billion. The central government and the state of Gujarat are picking up $2 billion. For what? For 5,000 jobs?
Experts say India may well have the ingredients to build a great ecosystem and move beyond mere chip making to focus on engineering, design and R&D. But the real achievement will be making this happen. The government definitely has plans to get it done.
We have already tied up with 104 universities and institutions for developing BTech, MTech, PhD level talent.
The question is, how soon? In Gandhinagar, this is Jude Sanath.
With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV 18.